Hello, everyone. I'm Meher Walia, and welcome to Finding Finance, the podcast where we delve into the different subfields of finance. This podcast aims to help high schoolers who are contemplating a career in finance understand the different paths in the world of finance and help them find which path interests them the most. Our esteemed guest today is Brian Mooney. Mr. Mooney is a retired options trader on bonds, also known as trading options on interest rates, working 24 years at Goldman Sachs. Goldman Sachs is one of the largest global investment banks and financial services companies that offers a range of services to corporations, governments, financial institutions, and individuals. He later moved to Merrill Lynch Bank of America, the second largest investment bank in the world, and worked there for 12 years before his recent retirement. During the 2008 financial crisis, Bank of America acquired Merrill Lynch, which provides a broad range of brokerage, investment advisory, and other services. I hope you enjoy our conversation with Mr. Mooney. Today is going to be especially exciting as we will get into some of the specifics of banking. We will go through several terminologies used in the banking system and explain them to our listeners. Mr. Mooney, thank you for joining us today. It is a pleasure to have you on the show.
Thanks very much for having me.
Let's start at the very beginning. Take me all the way back to your upbringing and give us insight as to what your life was like when you were younger.
Sure. Well, I'm from New York, and I grew up in Queens, and had a great childhood. Lots of people, lots of kids in my neighborhood, and we had a great time. It wasn't like you were living in the suburbs where you were having play dates and things by appointment. Where I when I grew up, you just walked out your front door, and you had lots of things to do and lots of friends. So everything was very easy. So it was a great upbringing, actually.
And where did you grow up exactly?
In Queens, in Richmond Hill, Queens, yes.
It's very nice. And what were some of your favorite subjects in school, or what were some of your favorite hobbies when you were younger?
Yeah, I loved all sports. I played all sorts of sports, hockey, baseball, football. My subjects. I liked math. I liked history. I wasn't too interested in the sciences and things, but I was a good student. Especially on the courses that I liked. On the courses that I didn't like, I had to work a bit harder on so I could stay in with good grades. But I really liked math and sort of the more quantitative things.
Oh, that's very nice. I love math as well. So after high school, you attended St. John's University. What was college like, and what did you study there?
Yeah, I had a great college life in Queens. Again, I didn't. There were no dorms actually at St. John's when I grew up. I still lived at home, and then I had an apartment afterwards. So yeah, it wasn't necessarily the college life where you move away, and it was sort of an extension of high school for me. So I didn't really stay at school very long after my classes were over. I kind of would go home and take care of things, and I had a part-time job that I would go to go to work during the days and study at night. So I didn't do a lot of extracurricular activities at school. I kind of was more like a commuter school for me, but I had a great experience and I got a great education there.
Oh, that's very great. And during college, did you secure your position at Goldman Sachs then, or was that later on?
No, I did start Goldman right out of college. I graduated in May, and I started in the end of June. So I had a few weeks off in between. I had a family friend who was working at Goldman at the time, and I was hired to work as an assistant to traders, help processing their trades and helping them with their positions and the activities and the transactions that they were doing. I was hired to help process those for the firm.
Oh, so you started with helping process trades. Then please tell me the story of how you became an options trader there.
Yeah. So when I was in university, I had an investments professor who was a retired commodities trader on Wall Street, and he left Wall Street and joined academia, and he was actually the dean of the business school at St. John's, and I had him for an investment professor one semester, and he was great. He would come in, and he was pretty well off, and he would do trades for himself, and he would help manage money for other people, some endowments, and he would kind of give us a play-by-play of the trades that he was doing, and the options and stock option trades that he was doing. And, when you're 18, 19, 20 years old and someone comes in and tells you that he's going to make or lose a lot of money when some option trades work for him or against him, it really gets your attention. And it kind of, when you're making minimum wage or not that much more than that, working a part-time job as a student, it really gets you, especially if you're interested in finance, it really gets your blood flowing when you hear all these crazy stories about all of the money that is being made and lost. And so, but he was a great teacher, great professor. He made it very exciting. And so and he taught us about options during the class. And so when I joined Goldman, I had a very good understanding of options at the time, and a lot more than many of the people that were working around me at the time. So I quickly got an opportunity working for a group of traders that were trading options on bonds. And that business was growing, and they were doing lots and lots of business and making lots of money for the firm. And everybody was worried about what they were doing because they were doing some very large trades. Not a lot of people in the processing area where I was working knew about options. And so when I came in, and that I knew a lot about them, the people that I was working for really took a liking to me because I was helping them sort of deal with these traders that were doing lots of big transactions. And ultimately, that trading group was growing so much that they actually, I think I worked in that processing group for about 6 months, and they took me out to the trading floor, and I was working with them directly. I wasn't trading right away, but I was working with them, helping them trade, and really getting a hands-on experience and a lot of knowledge, hands-on knowledge of what they were doing. So it was a very fortunate opportunity for me working at Goldman. Some of the smartest people on Wall Street, especially back then, they were, when people were doing things, they were doing things that nobody knew what to do or ways to make money. They were sort of cutting edge on everything. So it was a great opportunity.
So they're like trailblazers.
They really were. And, in years afterwards, things that people were doing, like everybody kind of started seeing these businesses. These guys were innovators. They were developing businesses and developing ways to help clients and make money for the firm and help clients make money. And, they were doing things. They were figuring out things before others did. So they really were on the forefront of helping out, in this options world and options on interest rates, which is what we were trading.
And you were very fortunate to learn that from your class and the professor. I
was. I understood, he was teaching us about equity options, and you can trade options on bonds, stocks, commodities. You can really trade options on anything. And he's the one who really gave me that intellect and understanding about what options were, and then really what you were trading options on, it didn't really matter. Just the options expertise regardless of what asset it was on, was really what would propel me to get that position so quickly.
So for the benefit of our listeners, let's go to the very basics so they can better understand this. So what is the difference between an investment bank and a commercial bank?
Sure. Really, there aren't too many investment banks anymore coming out of the financial crisis in 2008. But, historically, you had a Goldman Sachs, like when I was coming up there, or Morgan Stanley, they were investment banks. They weren't commercial banks. They didn't take deposits. They didn't have branches that you could go to, like a Bank of America or a Citibank or a bank like that. They were the more traditional commercial banks. Commercial banks did also have investment banks within them, but like Goldman Sachs really was only an investment bank, and they had trading businesses, they had commodities businesses, they had investment banking where they would help companies raise money to fund their startup companies and that. So they weren't really taking deposits like a commercial bank, but coming out of the financial crisis, essentially everybody became a commercial bank. Well, even though Goldman Sachs didn't have brick and mortar banks where you would go and do your banking, and then they also basically all created online banks. So they all became commercial banks so they could fall under certain regulators, and it was safer for the financial system. The financial system obviously was a mess, and everybody needed more capital. And being a commercial bank where you could take deposits, that would make your capital base a lot more stable. So the Fed basically made everybody become a commercial bank coming out of the financial crisis.
So that shift after the financial crisis make everything more stable.
Exactly. So now Goldman Sachs, which used to only be an investment bank, was technically now a commercial bank coming under different regulations, having a more stable capital base where if they lose money, they can afford, so to speak, lose money. They wouldn't, they weren't in danger of going out of business.
As what happened in 2008 with
The financial crisis.
multiple banks.
Yes.
And so what is a trader?
A trader is someone who basically manages the money for the bank. You buy and sell securities, depending on what could be stocks, bonds, commodities, metals, or even cattle, corn, anything. And you trade that, and you make markets, and you make prices. You can buy and sell things for clients. There are clients that need to do that. You might be an investment manager or a pension fund that has to buy some stocks for your employees, or you might have running money for a money manager where people have mutual funds and they invest in that. And so you're helping to facilitate the transactions and the purchases and sales of securities on behalf of clients, on behalf of the banks. And a trader at a commercial bank or an investment bank, they are doing that for their own clients and facilitating that business on behalf of the bank.
And so you mentioned that traders can trade options. What are options?
So options are just contracts, or they're agreements, and technically it's the right but not the obligation to buy or sell something at a specific price for a specific amount of time. And that's really simply, in its most simplest form, that's all it is. It's an obligation, or it's a contract to do something at a certain price for a certain time. And you can basically trade options on anything. You can trade options on a bond. You can trade options on Apple stock. You can trade options on the price of gold. So options are the contracts, and then the underlying asset could be what could be different. I traded them on bonds or on interest rates, but you can trade options on stocks, and you can trade options on all of these other asset classes.
I see. And in some of your previous explanations, you mentioned commodities. Do you mind just giving a brief explanation about what that is as well?
Commodities could be, gold, silver, hard metals, cattle, farming. You think of farming. Farming is a big business nowadays. A farmer has crops, and he can actually sell his crops on the financial markets, and he can hedge the forward price of the corn that he's going to sell. A farmer is actually a very big businessman, and running a farm is an enormous business now. You kind of think of farming as just growing crops and that, but that's a very big financial business nowadays. So commodities are any of those types of asset classes.
I see. And now what are bonds?
Bonds are just simply IOUs. It's like a loan. Anybody can issue a bond. IBM can issue a bond, and they want to raise money to manage their businesses. So they'll issue a bond. They can issue a bond for $100 million and borrow $100 million, and they will pay you an interest rate. They'll pay you a coupon each year. You might make 5%, say, on that bond. And at the end of a certain period of time, maybe 10 years or so, you'll get your money back. So that's a bond. It's just an agreement. It's a loan, essentially, between two different counterparties. In my example, it's IBM. The biggest issuer of bonds is the U.S. government. The U.S. government has the national debt now is $36 trillion. So there are $36 trillion worth of bonds and notes and bills out there that the United States has issued. People buy them. The United States pays them interest on that. And that's the biggest bond market in the world, is the U.S. government, because the U.S. government has borrowed the most money out of anybody out there.
Oh, wow. It's huge. And what do interest rates mean, and how do they affect our daily life?
Interest rates are just, what you will pay. If you issue a bond and you pay 5% a year, and so you have a $100 bond, you'll make $5 a year in interest payment. So that's the interest rate on that bond. Interest rates can fluctuate. If inflation is very high, interest rates tend to go up, and you can make more money and get more interest in the bank. We've come out of a period of many, many years where interest rates had been historically very low, anywhere from 0 to 3% or so. Interest rates recently in the past few years have gone up a lot as inflation has gone up, and that's moves around. And how does it affect your daily life? It affects your daily life in the sense of most people can't go out and buy a home without, they don't have enough money to buy a home, so you'll go to a bank and you'll borrow money to buy the home. If interest rates go up, you're going to have to pay more money back to the bank, thus you might not be able to afford a certain amount of house. So if interest rates go up, that could hurt housing prices and other things. So it could just make it more expensive for you to do whatever it is you're looking to do.
So when interest rates are higher, people prefer to save rather than spend.
Yes, although Americans aren't very good at saving, but yes, you're incentivized to save more, or at least investing in bonds is more attractive because you might get that fixed payment. If you can buy a 10-year note from the U.S. government and make 4.25% a year for 10 years, and there's nobody there's no better issuer than U.S. government because they're always going to pay you back. So it's not risky that you won't make that 4.5% interest. So, yeah, and as interest rates go up, it makes it more attractive because you're going to earn more interest payments. Obviously, if interest rates go down, it might become less attractive to buy those treasuries, and then maybe you might want to put your money in something else, stocks or something else. So as interest rates go up, it's great for savers, obviously, but not good for borrowers. So if you want to go out and buy a home and interest rates go up, it's not as attractive for you. But if you have money to save in the bank, you're going to get a better return because you're making more interest.
I see. And you briefly, I think, mentioned the interest rates connections to bonds. Do you mind just explaining that a bit more?
Yeah, so just the bonds that are issued have interest rates, and obviously, as for the U.S. government, they want interest rates to be very low. One can spur economic activity because maybe it's easy for people to borrow money. Then they'll start businesses and they'll borrow money to expand businesses. And more importantly, for the U.S. government, the lower interest rates are, it's cheaper for them to borrow money, and they have to pay back less. Higher interest rates are making it more difficult for the U.S. government because we have to pay back a lot more money. And currently, we still operate at a deficit, and that means that in addition to the $36 trillion we already owe, we keep borrowing more money. We don't have the tax revenue of the United States is not enough for the amount of spending that the government is doing. So you think that that's got to come to an end sometime, and hopefully politicians and people figure that out. But yeah, at some point in time, you wouldn't run your own household that way, and you wouldn't run your own business that way. And at some point, the United States should try to figure out not to run their own country that way.
So that tally of debt is only going to increase right now.
Yes. So I believe that we're at $36 trillion, and oddly enough, we went up by $1 trillion in the past 4 months. So we were at $5 trillion. So that comes from two things. One, it's becoming more expensive for us to borrow, and we keep spending more than we're taking in. So that incremental $1 trillion in the past 4 months is pretty striking and pretty worrying, to be honest. But at some point, we're going to have to figure out what to do about that.
So the deficit, once again, spending more than you're earning.
Absolutely. And, people wouldn't run their own lives that way, and actually they wouldn't be allowed to. The banks wouldn't keep lending you money if you owed that much money, because the likeliness of you getting the money back isn't so certain. But, the U.S. government still has the best credit, if you will, or the best amount of, or the best chance of paying you back. So, but at some point in time, we need to get our spending under control.
Yes. And so now we've broken down all the components of those definitions. So what is an options trader?
So an options trader, again, they enter into these agreements, the underlying asset class. It could be stocks, bonds, anything, commodities. In my position, I traded options on interest rates. Interest rates go up and down, and people would use options because they want to hedge out certain risks that they have as interest rates fluctuate. So I guess the best example of why somebody would trade an option on interest rates, and one of the clients that we would help manage their risk, are if you're a bank, if you're Bank of America or Citibank, and you issue mortgages to homeowners, and let's say they borrow money from you at 5%, and you take out a loan from the bank and you buy your home. Well, homeowners, if interest rates change and if interest rates go down, homeowners can refinance their loan. You can basically say, hey, I'm going to pay back my loan. I'm going to give you back the money that I had at 5%, and I want to take out a new loan at 4%. And that's great for homeowners because they're saving money. There are some charges and fees to do that, but as interest rates go down, basically the homeowner gets to renegotiate the loan that they took out on the home. So banks that have an asset on their books, because they have that mortgage and they're earning 5% on that loan, as interest rates go down and somebody refinances that loan, the bank no longer has that asset on their books at 5%. Now they're going to have to go out, they're going to get their money back, and now when they lend out new money, they're going to lend it out at the lower rate at 4%. So that's an adverse situation for the banks. You can trade an option contract that would actually make you money if interest rates go lower. And some banks would come into our market and they would enter these agreements with us, and we would come into an agreement that would say, hey, if interest rates go down, we'll pay you money, and then the banks would use that to offset the amount of money they were losing because somebody refinanced their mortgage. Now, if you think about that on a grand scale, mortgage markets are enormous. There are billions, hundreds and hundreds of billions of dollars of mortgages out there, particularly as home prices in the United States have gone up so much. So those amount of loans that are out there being refinanced, or if interest rates go or movements, those amounts of loans are enormous risks for the banks. So they might come into the options market on interest rates and try to hedge against some of those adverse moves.
So I see. So try to reduce that risk from the falling interest rates.
Exactly.
And is that what options trader on bonds primarily does?
That was one of the largest customers or client bases that we had, were banks that would come in, and because they have that reinvestment risk, that risk is called reinvestment risk, when somebody can come in, refinance their loan to a lower rate. They would do that with us, and they would try to hedge out some of that reinvestment risk so they don't necessarily lose, like in my example, that 1% from 5% to 4%. They would try to do some option trades with us that would make them some money in case interest rates move that way.
And you mentioned hedging risk a couple of times. Just if you don't mind giving like a brief explanation of what that
hedging
means.
is just a term to basically sort of offset some risk, or trying to prevent the adverse effect of something happening. You try to do something that will give you some benefit the other way. So if you have a negative event because you're a bank and somebody refinanced their mortgage, you would have a positive event from me. So you're sort of hedging yourself.
I see. And options trading on bonds is a very niche field. What made you want to go into this field, and was there anyone who inspired you to do this?
Well, I was always interested in finance and Wall Street and that certainly that investments professor really made it exciting, and that I didn't necessarily pick to go into the interest rate market. That's where I got hired, and that's where I got my job, and so that's where I was. That business was growing quite a lot. That gave me the opportunity at the time. So at the time, I didn't necessarily decide, hey, I want to trade options on interest rates as opposed to trading options on stocks or anything else. That was just sort of the path that I kind of found myself into, and it was an exciting business, and it was a growing business, and the business just kept growing for the first 20 years that I was doing it. Everything just kept getting larger and larger, and the business just grew immensely.
Wow. So large growth in that field.
Yeah, as the housing markets grew and the price of homes grew, the amount of loans and the amount of debt that was being issued for these things. Later on in my career, the amounts of people that would trade options, because people became very sophisticated at trading options on anything. You can make the returns, and the amount of money that you can make trading options is much greater than just buying. You can buy a stock and you can buy an option on a stock, and you can use less money to buy the option on a stock and make a lot more money on it, because you can use less money to buy the option than it would cost you to buy the actual stock. So, but it was more leveraged. You could actually lose as a percentage of your money invested in options, you could lose more, but you could also make more. And anytime you can make more money in finance or on Wall Street, it attracts people. They get interested in it because the rewards can be larger. So, nowadays you have a lot of money managers that trade lots of options. The advent of hedge funds over the last 20 years were basically just investment pools of money. A hedge fund is just people give people that might have money to invest or to save, but maybe not necessarily have the financial savvy. They'll give it to a money manager, which is now a hedge fund. And that hedge fund will simply just go out into the market and they'll try to make money however they can. They'll buy stocks, they'll buy bonds, they'll buy options, and their sole purpose is to make that investor money.
So a variety of ways.
Yes, yes.
And could you talk a bit about the roles you played at Goldman Sachs and what your typical day entailed?
Yeah, and there are lots of inherent risks in trading options. That it's a very dynamic product, so the passage of time can on these agreements can change the value of an option. The underlying price movements in the underlying asset will change the value of these options, and they're very quantitative things. So we would have portfolio systems that would run risk scenarios for us overnight, do model simulations. We would come in the next morning, and then we would get the output from all those. So, generally speaking, we would get in 6:30, 6:45. Everybody would look at what the output of all of these simulations ran, just in case, what if the markets would move a certain way, what would happen to our positions. And we would go over those risks and identify those risks, make sure those risks are what we thought they should be and that they made sense to us. And then any types of outsized risk that we thought we would have, we would go out and try to mitigate that risk, try to hedge it, do other trades that would, help make the risk not so volatile, make the amount of P&L, profit and loss, that you might have in any given day a little bit more stable. So we were basically risk managers, so we would do other trades that would help mitigate the risk for the bank. And again, we were managing client businesses that we were doing that was helping our clients manage their risks, and meanwhile we were doing that for the bank ourselves. We were trying to mitigate the risk of the bank.
I see. So the portfolio simulations overnight, and then you'd come in, analyze that.
Yep, make sure they made sense, make sure everything worked properly. We would have to obviously, we would report to many people. We had managers that oversaw the risks that we take. We had risk areas in the bank that were solely people. They didn't trade. All they did was monitor what the traders were doing, make sure that there wasn't too many risks that any one particular trader was taking. And if you think about a large commercial bank or a large investment bank, I was one trader in a group of, say, 9 traders were in the groups that I worked in, but you had hundreds and hundreds of traders at an investment bank, and we were all doing different things. So you need somebody to look holistically at what all of these guys were doing, and do we have the similar risks? If something happens in the markets and it all goes one way, is the bank going to make or lose too much money, or they have to worry about that? And somebody has to worry about not just what one individual trader was doing. You had to worry about the amalgamation of what hundreds and hundreds of traders were doing. It's an enormously important job, and it's a senior job to worry about risk and what happens with all of these positions. There's so many things going on, and the sizes of the markets and the sizes of the trade that even one person could do are quite large.
It's very complex.
It is, and you just think of what a trader is doing, one individual trader, but there's so many different functions at an investment bank of what people are doing. There are people that are processing trades that you do. There are people that, a trader buys or sells something, that money has to be exchanged. Things have to, be bought and sold. Money, the flow of money is going on. There's just an enormous amount of things that go on behind the scenes as well.
And how did your typical day change over your career?
It was, generally speaking, as a trader and certainly managing risk like that would happen quite a lot. As I got a little older and more senior, I would have a lot more client interactions. I would speak with clients a lot more and find out what their needs were. Most of the time, I would go to clients and they would ask me questions about my area of expertise. So the bank would put me in front of clients where my expertise and my knowledge base could help them understand what risks that they might have, or I could help them identify their own risks in their businesses and that. And that's actually a very exciting thing to do when you go and you kind of you speak with somebody and you can help them identify risks that might be good or bad for their businesses and that. And so while I still did all of the other things, as you got a little more senior, the bank wanted to put you out there to help more and more of their clients, not necessarily just do your normal trading job.
And then after Goldman Sachs, you transferred to Merrill Lynch Bank of America. What made you transition there? How did your work differ here than at Goldman Sachs?
Yeah, my job was basically similar, basically the same. And one of my former bosses at Goldman Sachs had gone over to, he was a very senior person. He went over to Bank of America, Merrill Lynch, and after the financial crisis, when Bank of America bought Merrill Lynch, he went over to help run the Merrill Lynch side. And so Merrill Lynch wanted some more, Goldman Sachs had a lot of expertise in certain areas, and he wanted to expand on that areas, and then options trading. So that's when he hired me to come over to Merrill Lynch and work again with him. So
It's very nice. And you did options trading on bonds there as well.
Yes, I was still doing option trading.
And I know the world of finance is filled with success stories. Can you tell me about one of your most exciting business initiatives?
Trading and option trading, true, is certainly a very exciting business. It's kind of, I always thought to myself that I wasn't necessarily a very corporate person. I really wasn't meant to be in lots of meetings, and I enjoy the excitement. When you're a trader, and that you might see on some TV shows or what people do. Sometimes they're yelling and screaming and cursing, and it's very stressful. And that was certainly what would happen. But that was only about 50% of our time. The other 50% of our time, I think we would be laughing and joking around, and so it's sort of a bit of a stress release. It's a very exciting job. I guess one of the biggest initiatives was the advent of this hedging for the housing markets, and that, I mean, that business really wasn't so large when I first started out on Wall Street. But as the housing markets grew and the amount of loans out there grew and the prices of homes grew, those markets just became extremely large. And then having the ability to trade options on that, which banks really needed that. They needed that product to help them hedge against adverse movements in interest rates. That really made it more exciting. And the sizes of the amounts of trades and business that were being done was very, very large, and that was very exciting and spectacularly interesting, to be honest.
Wow, that's great. And now, how about one that maybe made you learn a life lesson?
Life lessons, I kind of equate trading in that similar to sports, which I believe I'm a big sports fan, and I think they give you lots of life lessons, and making and losing money, and you learn a lot of lessons. One, you learn not to get too happy when things are going well, and not too sad when things are going badly. And same with sports, right? And that was one of the things that really attracted me to that job. It was just an exciting job and very fulfilling. When things go great, it's very it's successful and everybody's happy. But trying to keep a stable outlook on everything, not getting too happy when things are going well, and not getting too sad when things are going badly. And I think that's a great life lesson, to be honest. Hopefully life is a long journey, and you should not worry about the good times and the bad times so much. Just do your best and work your hardest, and hopefully in the long run everything works out.
Yes, that's so true. And I just want to say congrats on your recent retirement. Would you mind sharing your bucket list for retirement?
Sure. I've always done a lot of traveling with my family, my wife and kids, and even my kids are older now. They travel a lot now, so and I've been looking to do that. I've gone on quite a number of trips since my retirement, and I don't have to worry about getting home to go back to work. And I don't have to call in on my vacations and find out what's going on at work, and they can't look for me anything. So that's been a nice change of pace. It's being a trader at one of these types of jobs. It's all or nothing. You can't really do that job at 50%. So it comes a time where, it's not like you can work a little bit less or that. It's either all or nothing in a lot of those types of jobs. And, 36 years of getting phone calls in the middle of the night from Asia or something like that, which I did forever. And luckily I'm a good sleeper, so I can go back to sleep immediately. But, that's that amount of responsibility, and that, it's kind of behind me, I guess you could say.
Do you have any specific favorite places you love to visit?
Yes. I guess my favorite destination to travel to is Italy. It's one of the family's most favorite places. We've been there a number of times, and my wife and I just came back a little while back. But that's our favorite place. Great people, great history, great destinations, and great food. So.
Yes, really great food. I've been to Italy once as well. It's a great place.
Such a great place. So,
great place.
Yeah, we like that place the best, I guess.
And on a lighter note now, how do you spend your free time these days besides traveling?
Yeah, I travel. I kind of spend more time with my family and my parents, and do some things that I didn't have the free time to do ever. I guess I worry about things that I used to never worry about, but definitely a change of pace. The travel's good. My kids are older, and so I don't all live in the same place anymore, so we get to kind of travel around and make sure we see them. And yeah, it's just a different pace, but I still love following the markets. I wake up early. I woke up before 5 every day for my entire career, so I can't really sleep past 6:30 or 7. And so I get up and I watch Bloomberg TV for a couple hours every morning while I have coffee. And I still love following the markets. I still love to hear about things that are going on, and that still excites me, absolutely. Getting on the train to go into the city or something like that's a little less exciting, but it's that part of the job and that part of finance, and that still interests me a lot. So I still enjoy following that.
And you trade options at home still or invest in stocks?
Yeah, absolutely. Very actively. It's kind of in my makeup, and, always thinking about, ways to make money in that, but not necessarily just for the sake of having extra money. It's the interest of finding out thought processes and ways of making money or ways of interesting things. And, nowadays with the speed of change in the world, it's so easy to do that. And, you can have a laptop and trade anything for yourself or manage your own money or manage your family's money and things like that. You can do that from anywhere in the world now. And so it's very empowering. And there's this, certainly a lot different from when I was breaking into the business or when I first started investing for myself, and that everything is so easy now. You can open up an account now and in 5 minutes start trading and things like that. So that's exciting, and it's fun to follow markets, fun to follow companies, what they do, what they're trying to do, innovation. That's a fun experience for me.
It's very nice. And what are some values or principles that are most important to you?
Certainly, the things that are most important to me are certainly success, but family obviously comes first. I'm blessed with a great family, and that's a big thing for me, and just outright being a good person. There's lots of things going on, and finance is a very big, fast world, and I never really let that consume me too much. I always was able to keep that in perspective and not really let that change who I was. So I think that's an important quality. There's lots of people that I never dreamed I would be as, maybe for lack of a better word, successful as I became, but I never let, I never really changed me. I grew up, had a great family life. I'm blessed with a great family life growing up. My family life was growing up, and those are the most important things to me, certainly.
There's just some great values.
Yes, absolutely.
Retrospectively, would you pursue this career again? Would you have done anything differently?
No, I would always see myself working in finance and that, the different types of jobs that you can do in finance. There's so many different things you can do. I always wondered what it would be like to be an agent or for sports athletes or something like that. Or, that would kind of meld my joy of finance and sports too. So certainly Scott Boras, the agent for a lot of the baseball players, as a finance person, he's done, I think, probably he's done better than most of the athletes he represents with the amount of money he makes for getting them their contracts. But I think that would, being in the sports world now, that would be fun. But yeah, no, I would have always seen myself having something to do in finance, certainly.
And is baseball your favorite sport?
Yeah, baseball was my favorite growing up. Again, I'm from New York, and I'm a big Yankee fan, and things didn't work out exactly how I would have liked this year, but that's okay. I'm also a New York Giant fan, and that's really a disaster.
Oh, yeah. At least you have better luck with the Yankees.
The Yankees, yes. So, but no, I love sports. I love following sports, and yeah, absolutely.
That's great. So do I. So now for the question I ask every guest on my podcast. For kids in high school and college looking to enter the world of finance, what advice would you have for them?
I would say, whether it be looking for a job in finance or for someone in high school or going into college, and whatever you do, certainly pursue the things that interest you. That's certainly the most important thing. I think a little bit, sadly, nowadays with the cost of college educations and things, young people feel like they have to know exactly what they want to do, and that's unfortunate. And I can understand why they do that because the cost of everything is so good, but it's hard for an 18-year-old person to know exactly what they want to do. And so I think, I want to be whatever, going to college used to be about going and learning different things and being exposed to new fields or new knowledges or new areas of interest. But I would just say try to get exposed as much as you can to anything. Now, if you like finance or you think you like finance, go out and learn about what types of jobs are there, and certainly your podcast is spectacular for that.
Thank you.
So, but just talk to people. Nowadays the amount of things that you can learn so easily, and the amount of knowledge now because of the internet, and that these are things that I remember we would hire people now working in the trading areas that I work with. These young people now come out of college with what used to be 10 years of experience. Because they're able to learn so much more, that they're taught so many more things in universities. But as for specific things for younger people, certainly just go learn things, join clubs. There's so many spectacular things and things that you can teach yourself with on YouTube, and that you can teach yourself so many different things about finance and about anything. So really you have all of these great learning tools on computers now, and just expose yourself to everything, because what you thought you might like initially. When I was in college, I thought I wanted to be an accountant until I took accounting classes. I thought it was the most boring thing in the world. And I know I'd love numbers and math and things like that, so I thought accounting was the thing to do, until I took some accounting courses, and I was like, I can't do this. This is kind of boring for me. So just certainly expose yourself to as many things as you can, because you never know. And then, again, even if you think you knew what you wanted to do, the world changes so quickly now. The speed of change is so fast now. What you're doing now probably isn't going to be what you're doing in 5 or 10 years. For me, I did similar things over the course of my career, but that's sort of an outlier. More so now, with everything changing so quickly, with AI and everything else. Who knows what you're going to be doing? But that's just more jobs that you don't even know exist now. So just get lots of exposure to lots of different things.
Well, thank you so much for this very insightful, enlightening, and informative piece of advice and wisdom. I really appreciate it, and I bet the listeners will do so as well. Thank you for listening.
Thank you.